was a bit of a challenge where I had earned a lot of profit. And then I took a silly trade because I was feeling myself a little bit like, I got this, I'm good, and I ended up losing a significant portion of everything that I earned. And the way I was able to recover from that was just stepping away for a few days, not feeling the urge, like I don't have to trade everything. Let me get my mind right first and then go back and get in.
Welcome back to on with Kaci Jackson, a funded trader for the Fivers. Looking forward to talk about your story, things that you've done, what brought you to trade for prop firms, and how to also maintain the prop firms account. So, Kaci, welcome on the podcast.
Thank you for having me.
Good to connect with you, of course. So, tell me a bit more about kind of what you do these days as a funded trader and everything on the side of what you're trading.
I work full time too. I don't know if you knew that too, and I trade. So during the day, I work in economic and real estate development. And then what I do is I mark up my charts on the weekend and then just try to look for opportunities throughout the week so that I'm not babysitting or hunting during the week. So I'm a pretty busy person. I don't trade full time. People ask me that all the time, like, why haven't you moved to full time? But I really like my job. I really like what I'm doing. And I just do trading on the side.
One of the questions I get a lot is people feel like having a job could be a disadvantage to trading and they don't have as much time for trading, or they cannot just like find all the trades they would find without the job. How do you kind of manage both these things, like trading with the job on the side?
Well, like I mentioned, every weekend I sit and I mark up my charts. So I try to go through like 26 pairs to find setups. So going through that is one, for the muscle memory, and then two, to see what the best opportunities are. And so usually I'm able to find something, and you don't have to be in everything in order to make money. You just have to find the right setup. And so being able to mark up those charts and kind of like, I use limits and stops a lot. I actually have one in now, but I use them a lot, and it allows me just to be able to go and freely do what I need to do. I do check like on the trades throughout the week, but it's not like I'm sitting there marking up a chart from beginning to end, trying to find something to get into. So I find that it works well. I think that if I do trade like full time, I will probably blow my accounts and lose a lot of money. When I babysit, I find that I do more damage. So when I'm away and I just let it do its thing, then I'm good. When I'm watching and hand holding, it turns out to be really bad.
I'll be curious to hear how you got into trading. Like, what was the thing that brought you to trading, and how did things go from the beginning?
I came in like a lot of people through a MLM that you probably are familiar with. I saw somebody posting like an MT4 screenshot from the phone on Facebook. And I think it showed like $2,000. And I'm like, okay, what is this? And how can I be a part of it? So I reached out to him, and then I was brought into the organization. And I quickly learned that that was not the right fit for me. And I just kind of went on a deeper dive of trying to figure things out for myself. And so YouTube was a great resource. And I think that's when I kind of figured out on Elliott Wave. And I started researching that a little bit more. And then I ran across some people who had a method that combined really well with Elliott Wave. And I started trading from there. I didn't get serious about it until maybe 2.5, 3 years ago. I took an account from like $150 and flipped it to almost 5 figures within like 3 weeks. And I'm like, okay, this is serious. This is not just a game. I can really earn some money with this. And so I got more intentional about marking up charts on a regular basis, just being really serious about it. So that's how I got started. And that's how I ended up where I am now.
So when you say you got serious about it, what are some things that you changed to sort of be more serious about trading?
Well, when I first came in, I was told that I could use a cell phone to like trade, and that was it. Realistically, I mean, that sounds nice and it sounds convenient, but realistically, that's not true. Like, you need an actual chart marking platform and a computer or iPad or, something in order to really look at the charts. And then also with my studying. So I just started studying on my own Elliott wave theory, Fibonacci, really trying to advance my knowledge and my skill set to make sure that I gave myself the best opportunity to do well with this. On top of that, what was it, last year? I went and I got my Series 3. So in the United States, with the National Futures Association, you can become licensed or whatever. So I just wanted to make sure that I really understood this whole industry because I hadn't been exposed to it before, so it was really fascinating to me. So marking up the charts on a regular basis, making sure that I'm managing my risk properly so that I could actually grow and not just trying to flip an account, trying to have longevity with it and making sure that I had access to, good education and that I was well informed about this industry as well.
What did you learn trading? Was it more from mentors or from only like free resources, or do you feel like being registered sort of help you to also get better at trading?
So I will say that mentorship did play a part. However, it wasn't the sole part. I had a mentor when I first got started, and for me, I still didn't experience success until I got serious about it and I started putting forth the effort. I tell people all the time, like, somebody can give you the $1 million play, but if you don't understand how to execute it and you don't have the discipline in order to do it, it doesn't matter. So while mentorship is important, it's just as equally important for you to be serious with it and to take action as well.
That's a good point. So a lot of people expect mentors to do all the work for them, but it's actually you have to do the work on the side after getting
Absolutely. Absolutely. If it was that easy, I mean, it'll be a whole lot of successful people out here. So
what brought you through to prop firms? Is it you wanted to get more capital to trade with, or was it more a challenge for you? What kind of got you introduced to that?
So, it was just after the start of, the pandemic or whatever. And it was a group of us who were meeting regularly. And my cousin was a part of that. And then also the people that I used to trade with. And I didn't know anything about it. But once they exposed me to it, I'm like, okay, so if I was able to take $150 and grow it almost to 5 figures, if I had more money, what would that look like? I'm able to do it more responsibly, basically, and have the ability to scale and grow. So between my cousin and that group, they kind of turned me on to the fact that there was a totally different route that was available with trading than what I thought with. I thought you could just trade with your own money, but now having access to more money, the earning possibility is amazing.
Tell me how the prop firm experience went. Was it successful the first time, or you had to kind of go back and forth and try it out?
No, it was not. I started out with a different company and I quickly learned that their style was not my style. There was a lot more limitations on how long you could hold trades. You had a certain amount of time to finish the challenge in, and I think it was like 30 days or something really short. So there was a lot of pressure, and I probably failed the first one, and then I passed the second one. But as soon as I got funded, I lost the account. And then in being on YouTube, the Fivers reached out to me to look at their program. And as soon as I started reading through it, I'm like, okay, this makes more sense for me and my trading style. And so with them, it was more so they allowed intraday and swing trading. They allowed you to hold positions over the weekend. You had I think it was a year to finish the program. So there was less pressure. And even in that, though, I passed like the first 1 or 2 and then I lost it. So it was not until this year. And I want to say 21 is when I stopped doing testing for prop firms altogether. And I kind of just focused in on getting better as a trader, because it's like, why am I going and spending $400 to $500 every test only to lose it? Like, there's something that I'm doing wrong that I need to fix. And my thing was risk management. I was still over leveraging, trying to make everything in one shot rather than building on the account. And so I didn't try again until this year in February. And in February, that account I was able to pass successfully. And now I'm working on my second account with them as well.
You mentioned, were you reducing your risk per trade? Is that what made the difference, or what exactly changed there for you to pass it?
Yeah, well, I guess you could say I'm kind of like an analytical person. So I needed something that made sense for me and made it really simple so I could understand what I needed to go in with. And I understood what I was going to lose up front. So I made myself a tool that allowed me to know, based on this pair, this is the max lot size you could trade in order to lose X amount of dollars. So in conjunction with that, understanding risk to reward. So I don't take setups that are less than 3-to-1. And then in that, I know going up front, I only want to risk 1% to 2% of the account in whatever trade setup I'm in. So having that formula, like, unless I lose every single trade that I take, like, the account has no choice but to grow. You know what I'm saying? So understanding all of those pieces and putting it together really made the difference for me.
You probably see a lot of traders who reach out to you because they failed the prop firm challenges. What do you see as a common theme of people who fail these prop firms? Is this only about the risk, or is there something else in play that you think people could do better?
I think that people have like unrealistic expectations of themselves. And then I think that also they don't understand the science behind the math. So one, I think that, and I'm really not trying to knock anybody on YouTube, but I think that Forex has been sold as like a get rich quick scheme. And so people come in with the mindset that, oh, all I got to do is this, and this, and then it'll just happen, and my account will be good, and I'll be able to grow, and make a whole lot of money. And so I think that's the unrealistic expectation. And then they want it to happen like fast. Like, you really have to have a good understanding of what you're doing. And that doesn't happen in 3 months of you starting trading. Like, you really have to be honest with yourself and give yourself the time in order to come up with a strategy that works and learn how to successfully execute it. And then when you add in the other pieces like the risk management and all of that, then you can be successful. But I think people are just unrealistic. It's been sold as something that is not. And I think that's why a lot of people end up losing.
That's a very good point, for sure. Definitely a big one. Do you feel any more pressure trading for a prop firm than you felt trading on your own account before?
Yeah, I do. But at the same time, I think that I have a little bit more leeway than I had on my own account too, just because the capital is more than I would have put into or started out with in a trading account. So they give you a lot of room to make mistakes. And so you can recover quite nicely. So I still think it's pressure though, because it's the form of accountability too. So, within the communities of the Fivers, within the Facebook group, the Discord, and then the staff, like, you still have to perform at a level, other people are going to be able to see what you're doing. So I think so. When you're in your own account, it's just you and that broker, and that's it. Nobody ever has to know. But within, the prop firm account, a lot of other people have eyeballs on what you're doing.
You mentioned you had a community before you kind of got funded, and also once you get funded with the Fivers. I think a lot of people try to do trading on their own, like at home by themselves, and not get to like any kind of community. Do you feel like this helps you a lot? Is it like, what do you get out of it, of that community with other traders around you?
I think the community can give some level of accountability. That's if people participate. And if people are not afraid to ask questions and whatnot. But I think the community can also be good because a lot of times you may have a question, or like I would have a question when I was working with a mentor that I may not have been comfortable asking, and somebody else within the community would ask. So you get a lot of things clarified that you may not have wanted to ask up front, or that you may not have even thought about yourself. So I think communities can be beneficial. For sure. And I think that people should participate a little bit more in them and understand that there are no silly questions ever. This is a pretty high level skill set that people are trying to learn. So having a safe space to ask and learn is always good.
People are going to want to know about your trading style and kind of what you trade these days. You want to share a bit more about kind of what you look at, or what things you focus on in your trading, and what kind of style you're focused on.
Yeah. So I think I was telling you before that when I first got started, I noticed that I was like swing trading. So my trades would take days, sometimes weeks to play out. And now that I've moved to the prop firm account, I've noticed that my trades last anywhere from like 4 to 9 hours total. And so what I do is I do like a multiple time frame analysis just to understand how I need to approach the market. And so I go in and I trade reversals, and then I also trade with the trend. But I find that the reversals typically work really well for me. And so I go in and I identify like my key levels of support and resistance on every time frame. So starting at the monthly, going down to the weekly, the daily, and then the 4 hour. The 4 hour is typically where I stop. And then I use Fibonacci, heavily based fib trader. And then with the combination of Fibonacci, trend lines, support and resistance, I'm usually able to find the setups that I want to take.
So you're looking for like a confluence of multiple of these levels at the same place? Is that kind of the idea?
And Fibonacci. So, what I've started to learn as I've more religiously been on the charts is that what we tend to see is that when there's some big sort of economic news that's supposed to come out, if price is at a key level and, I haven't gotten the full play of what I'm looking for. So when I'm speaking of like reversals, there's a setup that I trade. I use Fibonacci retracement and extension. I use a platform called Smart Trader, and it combines the tools. And so basically what I noticed is that if we have less than like a 38.2 pullback, and then price stalls out at the 118, 127 extension, that when that news comes or we're sitting at a daily resistance level or support level, and that news is set to come out, that typically we'll see price go back for a deeper retracement. And those are the plays that I typically take. Because I want to say it's pretty solid. Like majority of the time, it turns around and goes back. So that's typically where I catch a lot of my pips.
You mentioned you hold your trades a little bit less longer now that you're in the prop firm. Did you kind of change time frame, or did you still kind of trade on the same time frame, or what made that switch in the duration of your trades?
Going down to the lower time frame. So even though I'll mark up to the 4, I noticed that the levels that I'm normally taking or shutting trades down at is typically off the 1 hour, excuse me.
So that means that with a full-time job, it's tougher to look at the 1 hour chart like for every candle when it closes. So do you have specific time you look at the chart, these are going to be good times for trading, or do you kind of do your analysis first and place your trades that before going to work, or how do you kind of work this out?
So I basically I hate to put it like this, but set a trap, if that makes sense. So going in, understanding the key levels first, understanding what exactly I'm looking for, setting limits and stops, and then letting it go. So sometimes if I'm not being impatient or being nervous, and I think probably that's where a lot of my why I closed trades out a little bit earlier than what I was doing comes from in the prop firm, is because in the personal account, you don't have targets that you have to meet in order to advance. I think I get a little bit of anxiety because I know that, okay, if I hit this profit target, then I can go ahead and move to the next thing. So there's really no reason for me to continue holding much longer if, you know what I'm saying? I can close out and just be done.
So it's about dealing with that, plus trying to stick to your plan and your rules that works, and also being able to benefit from the rules of the prop firm. It's interesting. It's a style I want to get better at too, because it allows you to kind of look at the charts at least once a day and then be done with it. You don't have to go back and wait for the candle to close to enter a trade. Like the way I do it is I wait for candle closes to enter trades, but that means that I got to be there when the candle closes to at least look and place a trade. You doing it like before that, earlier, makes it a lot more advantageous, but it's something that I'm not comfortable with yet to do that, to kind of do it that way. So it's different.
I got you. Now, there are some, depending on the type of setup, there are some rules that I do have in order to execute if I'm going to do a market execution. And those typically are where I trade a little bit higher lot size. So I need to see like a bullish break of the trend line. I need to see a backside retest. I need to see, a swing low or swing high form before I execute. But those, like I said, those are going to be bigger positions. And I don't want to say more risky, but I may not be as confident in the trend in executing those. But if I know for sure that I am 100% confident in my analysis and what I'm moving forward with, then I go ahead, set the limit, set the stop, know upfront what I'm going to potentially lose if it doesn't go right. And those positions tend to be a little bit smaller.
So you can adapt your risk per trade to different characteristics of your trades.
Yeah.
And is that based on any kind of backtests you've done to know which one works the best, or how do you decide which ones you want to risk more on?
Well, it's all based off of the stop loss, right? So, but if I'm going to max out on, let's say I said I want to risk 2%. If I'm confident in my analysis and I see like a strong trend, then I go ahead and I say, okay, I'm going to max out at this position. But if I'm not as confident, then going smaller within, let's say I got 2%, but I don't know for sure. So I'm only going to go 1% on this one. Does that make sense?
Yeah, definitely. Yeah,
okay.
Yeah, in that case. So do you keep any kind of journal where you can keep track of your trades and see what you did on different trades and kind of have a log there, or?
Oh yeah, I use a what's it called? Google Sheets. So the little calculator that I have is in one page, and then I actually have a journaling like for every pair to understand why, I did what I did or why I chose to do what I did on a trade.
Do you kind of go back and look at that journal and find ways to improve from the journal that you keep track of?
Oh, yeah. I definitely go back and I look at winning trades and losing trades to understand why, what did I miss in my analysis when something did go wrong? And when it does go right, understanding, the steps that I took in order to make that analysis and why I executed when I did. So going back and studying is, like I mentioned, it's an important thing in the process. And I think that's why I was able to get better and able to pass, the prop firm test and get funded.
The cool thing is you're able to do trading with not that much time, which is definitely good. You're able to also like put in the right habits around it to kind of keep track of your metrics and your stats, your journal, like you mentioned there. So that's really good. What do you think makes the difference between traders who keep the capital in prop firms and traders who tend to lose it over time or tend to blow up the account once they get it? Is it only the risk, or is there something else to it that you think makes a difference?
I think it's psychology for sure. You may become, and I'm not saying you personally, I think I've experienced it too, like, feeling yourself a little bit like overly confident once you pass, how many levels they have set for you in order to prove that you can trade, and just becoming overly confident. So what I've noticed is that, stepping away, whether it's a trade gone bad and I'm on a losing streak, or whether I've just had like a really great day, stepping away to like recenter and refocus is important. Otherwise, you have like this overinflated confidence that can cause you to make, some bad decisions that might cause the account to be lost, as you just mentioned. Or, just having a streak of losing trades. But I think it's important to just like recenter and refocused. I think I talked with the Fivers about that, going through one of my accounts. I whizzed through like the first two, and then the third one was a bit of a challenge where I had earned a lot of profit. And then I took a silly trade because I was feeling myself a little bit like, I got this, I'm good, and I ended up losing a significant portion of everything that I earned. And the way I was able to recover from that was just stepping away for a few days, not feeling the urge, like I don't have to trade everything. Let me get my mind right first and then go back and get in.
That's a good point. It's when everything goes well that you have to be the most careful about like the trades and everything around. Otherwise you can screw up. Yeah.
Absolutely.
So when you say you take a step back, is it you kind of leave a few days there when things go too well, or how do you kind of guess how much time you got to take off in that case?
So usually I will take a couple days just to stop, and in that I've noticed it's usually Wednesday or Thursday. So if I've had a good day and it's Wednesday and I don't need to go look for any more trades at this point, it's coming to the end of the week. Like, I don't want to mess anything up. If I have a trade or I get into something or try to force something and I end up losing, like that's going to be a bad weekend for me. So I just stop while I'm ahead and then start again fresh on Sunday night.
That's a good point. So a lot of traders are trying to either recover by the end of the week when they have a loss, or they're trying to kind of get the best week ever because they had a good win or a good series of win in the beginning. Then they just grow from there. So it's a very good point.
No, stop while you're ahead. And it's not fun. It's not fun losing and then having to sit for the weekend in the thoughts like, man, if I just would have left it alone, I would have been good, you know. So
Just thinking that could be a good motivator to just stop and take a break. That's a very good point.
yeah. Yeah.
So what are your next steps? What are some things that you work on now that you're funded? Of course, you want to grow, get multiple accounts, but what's your next target and things you're working at the moment?
So I'm working on the 175 account right now. And like you said, I want to have multiple accounts. I think I want to start looking at, I don't know for sure if I want to look at other prop firms. I know that it's probably a good idea not to have all your eggs in one basket. So just finding another prop firm that has similar values, that aligns with my style and, you know, my values, what I believe. And just trying to grow and scale from that. I would love to be able to use trading to fund like my passion projects, I guess you could say. So I mentioned before, I'm an urban planner and I work in economic development. I live in a city that is one of the poorest cities, or median income, I guess you could say, is very low. And so I really want to expose children within the city to this skill set early. I think when we talk about, you know, economic development and advancement, that somehow trading can play into that space. I haven't quite figured it out yet, but I just think like if I had been a teenager and I had been exposed to this, like where would I be right now? And so I think it's important to, one, let the children know that it's out there and it's a possibility, and then providing them with the tools and the steps in order to, if they want to pursue it, do exactly that. So like I said, I haven't figured out how to do it yet. But the main goal first is to continue to scale that prop firm account so that I can be able to work on putting something together that will get young people exposed to the skill set early.
That's definitely a good mission there, because a lot of people get to trading and introduced to it with the wrong method, either like through like you said the MLM or these other things and stuff, right, to kind of go from there. So definitely a good vision there, and you can definitely make it work. But it's a tough game to show people how trading really is and like the real aspects of trading. So
yeah, it is. But I just think back, like if I had everything that I have learned over these past 6 years up front packaged in one, you know, like my learning curve would have been a lot shorter. So I think if you lay the plan out there for people, like those who are really interested and want to pursue, they'll be able to figure it out. Those who want to play games and be flashy and, you know, that's not, it's not for them. So
it's a fun discussion I have with traders sometimes. Do you feel like it's possible to become a good trader without kind of going through the downs, like going through the blowing up accounts, like the big drawdowns? Do you feel like that's possible to achieve?
That's a good question. I feel like that's kind of like life, right? So you have parents who are supposed to impart wisdom on you and kind of guide you and tell you what not to do so you don't make mistakes. And you have some people who abide by that really well. And then you have those people who have to go through certain instances in life in order to figure out and to learn. So I really think it's based on personality too. In order to determine which route you're going to go. But I think having the option there of being able to say, hey, I did this, I blew up accounts, I lost money, I lost tens of thousands of dollars. You don't want to do this. That's going to reach somebody somewhere. And it may not reach everybody, but it's definitely going to make an impact for sure.
What would you tell traders who want to get funded by prop firms or maybe newer to it? They don't know really what they want to trade or like what strategy they have and stuff. What would you tell them to focus on, or where should they kind of go to learn and actually become better?
I think YouTube can be a valuable resource. I think that though, if you're new and you don't really know what you're looking for, you're going to have to sift through a lot of not so great information. But finding a good source of education is important. And like we discussed before, community. And then finding a trading style that aligns with your lifestyle is also important too. Because I think there's probably a lot of people who could be good traders, but they're trying to do one style of trading that doesn't fit with what they've got going on in life right now. And so they're not seeing success because of that. But YouTube, I think, is a good place to find a lot of people. There's a lot of people out there. Just finding someone that you vibe with, that their style makes sense to you. That was my thing. I saw a lot of people, but I couldn't find what I was looking for as far as I'm a process person. So I have to understand step 1, you do this. Step 2, you do this. Step 3, you do this, and then having all of that lined out. But finding a community is very important. But like I said, YouTube probably is a good place to start. There are some other like paid schools. I don't want to knock the MLM because there are some people who are really thriving in it. And it works for some people, but recognizing and being cognizant early of if it's working for you or if it's not working for you. I also think that there are some good books that people can read as well. In getting into this space, like Naked Forex was really good for me. That's probably the sum of what I do think.
So what can people find you or connect with you if they want to reach out and see what you're doing after this podcast?
Oh, I'm on YouTube. So it's just my name, Kaci Jackson. And I try to do like technical analysis videos. So what I would have wanted to see when I was new. But I also have a community on Facebook as well, where we do some light talking back and forth about steps in process and trades and things like that.
Awesome. I'll try to put a link below the video here in the podcast show notes as well, so people can check you out at Kaci Jackson. And Kaci, I appreciate the advice you gave here to my listeners and sharing your story. I think it's been good to hear and good to talk with you. And hopefully we can connect in the future and see how you're doing in the future.